Hi everyone, this is Vivek here, and in this video we'll speak about gold, the international markets, and finally our markets. So last week we spoke about gold, wherein gold was at an important resistance at 165 odd levels, and the support was at 159. So finally, the 159 zone was broken, and for a week it closed below that. So therefore, an important support zone has been broken, and the next support now lies at around 153 odd. So definitely, gold was at resistance, and we spoke about how weak, in spite of the rally, the probability of gold coming down is much more than it breaking 165 and moving up, back to its previous highs of 185. So therefore, now 153 is a very crucial zone here, and because below that there's a big void, and once this 150 to 70 odd levels will be taken out, there'll be a sharp. There should be a sharp fall in the precious metal all the way till 132 odd levels. So this is something that we need to watch out for. This is just 3 to 4%, but this is big, and once this zone will be broken, we should see a good fall in the precious metal. So that is as far as gold is concerned. Now, the next is the international markets. We spoke about S&P. Uh, so S&P has retraced most of its fall. It's back to its pivot point at 3257 odd levels. So this is just 3 to 4% now left, where the index would have retraced the entire fall now. And so if you look at in percentage terms, the rally is more than 45%, and that's a big rally. And so we know that this is indeed a rally and not something that you can rely on, because indices don't run 40-45% in 2-3 months, and therefore this rally should not be taken seriously. This is definitely not. This is definitely not a bull run. Okay, so 3 to 5 7 is the level to watch out for. S&P is just 3% odd left, and therefore not much room left on the higher side. And so next week, definitely the next week should be very crucial, because we are right there in the zone. Now, if you look at the Russell index, which is their mid cap index, if you look at this, it has reached its resistance zone again at 1500 odd levels. Now, the next zone here is, again, it's very, there's a big void here. And if this zone is broken, there could be a big rally in the mid cap index on Russell 2000. So this is what is important here. It has indeed crossed important levels. Now it's at an important resistance, and with S&P just 3% away, we just need to understand if can Russell 2000 stop? Can there be a divergence created? So this is an important indicator whenever the S&P keeps rising, but as Russell 2000 stops its upward movement, it's a good indicator that things are indeed changing. So again, this will be very important to see if uh, Russell 2000 can stop its upward move at this level, and start coming down. So that is Russell 2000 for you. Now, if you look at DAX, the other important market indices, now just put it on the weekly chart. Again, it also broke an important zone last week. It had a tremendous run last week, and it is again 3 to 4% away from its pivot point at 1237. So this is definitely this is something. This is the minimum that we are looking at. Rather, this is the maximum that we are looking at for the indices next week, and because this is an important zone. Again, DAX has also rallied majorly from its low of around 8,000 odd levels. So there's a huge rally in both the American market and the German market as well. So 3 to 4% room, that is what we're looking at in DAX. So if you look at the international markets, they have rallied back to the highs, and whereas our market has not done that much. We have still been much lower as far as retracements are concerned. So if you look at Nifty Next 50, on the daily chart, we spoke about, because it had broken this zone, we spoke about the room till 25,000 odd levels, and the indices has closed above this zone now. And since it has closed above this zone on a weekly basis, it means that we're looking at higher levels as far as Nifty Next 50 is concerned. And the next level is the pivot point here, which is at around 26,900 levels. So there's a good 6 to 7% room as far as Nifty Next 50 is concerned. And so if Nifty Next 50 is gonna run 7% odd, then definitely Nifty and Bank Nifty would also not be left behind. And so we'll see what's there in Nifty. Okay. We look at that on the weekly chart. If you look at on the weekly chart, this 9960 10,000 odd levels was an important resistance which was broken last week. And since that zone has been broken, now we're looking at higher levels now, and so 10,440 is the next zone, which is 61.8%. But I reckon this zone would also be taken out. I'll tell you why. And next would be the pivot point here. This is the gap zone, and this is the 10,750 odd levels. So next week would be a good rally as far as our markets are concerned, because they have been behind, they have been left behind, and now that they have crossed important levels, we could see some good rally coming in as far as our markets are concerned. So this is Nifty 50 for you. Bank Nifty has definitely been a laggard, and that is something to watch out for, because on the weekly charts now, there is a double bottom here, and there's a divergence as well. There's a positive divergence. You convert that into a line chart and you'll be able to see that. So there's a positive divergence as well, and so this will be interesting to see, because Bank Nifty has not done much in this entire period, and so this level is becomes extremely important here, of some 22,100 levels, and above that, because above that it will be new zone, and the indices could really rally very high, because it has been consolidating here, and now break of this zone would really fire up the index, and the 61.8% is at this zone here, which is 24,800, and 24,800 I think is easily achievable by the indices next week, once this zone is broken. So it's a matter of time that this zone will be taken out. It would be taken out now that the Nifty Next 50 and Nifty 50 both have already broken their important zone. It's just a matter of time that Bank Nifty would also do the same. So a good rally is expected, I think, next week. So if you just look at some of the banks, look at HDFC Bank here. So if you look at HDFC Bank, HDFC Bank again closed above an important resistance of 1,024. Last week it closed at 1,033. So the next zone here is 1,092 odd levels. So there's a good 70% room as far as HDFC Bank is concerned. And so most of these banks, private sector banks, are showing positive momentum, and that makes me say that you could see a good rally happening in the banking space. You look at Axis Bank, you look at ICICI Bank, all of them showing positive momentum. And so here it is. You look at Axis Bank again. It took an important support here at 378. You look at you look at say here again a positive divergence being created at your support zone. So everywhere you're seeing that, and that that makes me believe that this rally has some legs left. It's although we are behind, as far as the retracements are concerned, but we will not be left behind next week. We should cover quite some space next week. So important zone here for Axis Bank is 425, because above 425 again there's a big void here all the way till 500 levels. So that is Axis Bank for you. Even ICICI Bank is showing positive momentum, and you look at this, it has closed right into the zone of resistance, which is some 356 odd levels, and above this then it should be around 387 and 419. So these zones are likely to be hit. Now again you look at RSI here, again the RSI is showing positive divergence here. uh, so in most, and this is monthly chart, and that's why it's more important, because when you see reversal indicators on monthly chart, it means that there is much more room than normally we were expecting. So I think overall the international markets have reached their resistance zone. They would they're just away 3 to 4%, but we have some room left. Seeing the way Bank Nifty and the banking stocks, the way they are showing reversals on the monthly charts, and that's just an indication that we could rally much more before the turn of events happen. So that is that from me. Thank you so much for watching this video.